Intro for free right now at this exclusive web address, ziprecruiter.com/free. Zip Intro. Post jobs today, talk to qualified candidates tomorrow. Once again, go to ziprecruiter.com/free to try it for free. That's ziprecruiter.com/free.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
Are you paying too much for term life insurance? A man age 50 non-tobacco user can obtain $500,000 of coverage for as little as $110 per month. Level rate for 20 years. That's right, guaranteed level rate for 20 years. If you're a smoker, there are great rates available for you as well. Call Term Busters for a quote. 1-800-908-7636. You're probably paying more than you should. Call 1-800-908-7636. Remember, call Term Busters. 1-800-908-7636. Sample rate for preferred non-tobacco rate class. Exam required to qualify.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy, but important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title again is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning, happy Tuesday. I hope everyone had a lovely Memorial Day. Memorial Day itself was quite nice. The whole rest of the weekend was a terrible time to have a 3-day weekend, but I hope everyone had a great long weekend and back at it on Tuesday feeling refreshed. I know I am, especially with markets making a completely illogical jump forward here on some tariff news. We'll be covering that as well as the news from Friday of last week when it came to the EU as well as Apple. We'll be talking a little bit too about the deficit and just that growing number and whether or not it should eventually matter to households, and a bit of housing talk as well. It's Mike, Paul, and Tucker with you on a Tuesday morning here. In terms of other data points that we'll be looking at this week, we do get the Federal Reserve's preferred measure of inflation, which gets released on Friday of this week. There's some consumer confidence numbers coming out this week as well, but earnings are at this point pretty much done. A pretty solid earnings season, as we will get into. Obviously, news didn't really focus on that a whole lot as much as it did the tariff changes and up and down on those policies. But we have a consumer confidence reading that just came out, I believe, today at 10 a.m. We'll have Federal Reserve members meeting all week and basically telling you that they're not lowering interest rates anytime soon. Every Thursday, we get the jobless claims. We'll also get pending home sales on Thursday. And then, like I mentioned, that preferred inflation reading from the Federal Reserve, the PCE index. They don't produce it. It's the conference board that produces this, but that's their preferred measure of inflation.
NVIDIA tomorrow. Their
NVIDIA's is going. Yep. Okay, so the last big And arguably one of the most important earnings calls of the season will be going tomorrow, before or after the bell?
After
the bell tomorrow. So let's just recap what we had happen over the course of the weekend. On Friday, during our program, I believe, or right before the program, the White House announced new tariffs on the European Union after being frustrated, apparently, with the pace of negotiations with the EU. We announced new 50% tariffs on all European goods starting on June 1st. Those are now delayed. Those are now July 1st instead, after calls occurred with the White House and European Commission President Ursula von der Leyen. So those are now suspended. Apparently the ones on Apple are, I think, still on, but we don't have a lot of clarity because I don't think you can have single company tariffs. Tucker, am I missing anything on this?
There's been no news as of Friday.
There's been no news on this, but on Friday it was announced that Apple specifically was going to face 25% tariffs on all imported iPhones.
Mm-hmm.
I doubt that the White House is going to impose specific tariffs on just iPhones. I would suspect that it'll apply to Samsung and Google and many other electronics companies as well. But this apparently in response to the push from Apple to look at India as a kind of replacement for the Chinese manufacturing hub. And in fact, you did see in the month of April, the U.S. imports of iPhones surge in India. Mainly, my guess would be because they have flexibility in terms of just where they ship the same product from. And so if you can say, okay, send all of our Chinese-made iPhones to Europe, send all of our Indian-made iPhones to the United States, then you can kind of balance out that trade risk. But nonetheless, we will be awaiting more news on that front. And in fact, Trump advisor Hassett says they, quote, don't want to harm Apple with iPhone tariffs. To me, this means it's not actually happening. And I guess that's where I want to start with all of this, because we had stock markets sink a little bit on Friday. And my perspective on this whole thing was, I don't buy that the European Union is going to be facing 50% tariffs on June 1st. And apparently stock market investors on Friday didn't buy it either, that the European Union was going to face 50% tariffs. Turns out we were right. They are not going to face 50% tariffs come June 1st. They may face them July 1st, but my guess is that those don't actually go into place either. And my concern is now that the president has lost most credibility when it comes to tariffs. I don't think that they are the best tool for this job that they're trying to achieve, at least not as used. Like, I think that tariffs actually could be a really good tool when it comes to China and really combating the way they treat American businesses. But if you're going to succeed with that, A, you can't waive them after like 30 days, and B, you probably need some of your close allies to pile on there and buy into the idea that, hey, the European Union isn't going to keep importing all of these cheap BYD EVs, and we're going to get together on that. And that's not how it's being used. But regardless of my own views, the White House has made tariffs a centerpiece of their policy. And the concern that I have is I don't think European Union officials took it seriously. Stock market investors definitely didn't take it seriously. And I just wonder what position this puts the White House in the next time it heads to the negotiating table with India, with the European Union, with China. Is anyone actually going to believe them? And then is the administration going to need to actually push the envelope on this in order to regain credibility? These are big looming questions that I just generally get concerned over, because I don't think anybody actually knows where these tariff rates are going to go.
I was thinking about it this morning, when the news arose on Friday, particularly because of how tight the deadline was going to be, June 1st, the implementation of it. It was a situation where I similarly myself sat there and said, I'm not really concerned about this. And over the weekend, it's not something that I focused on a lot.
And by Sunday, it was gone.
Exactly. And it was just something that was an afterthought, just because you're starting to get a little bit more comfortable with the playbook from the administration. This is a negotiating tactic. And I was pretty convinced that when that information was announced on Friday, that that was the reason for this. It was a call to action to negotiate further, but not something that was going to be punitively put into place. And it does become like the boy who cried wolf situation a little bit. You do have to be careful how many times you go to using this tactic. And, I'm not a politician and don't have the training, so I defer to the administration in office. But in terms of tariffs, I agree with you on some aspects of national security and some targeted sectors of business. It could make sense, but there needs to be a more clear plan and a decisive call to action. And we've talked about this a lot because tariffs have dominated our program for months on months, is that the back and forth nature of them, I think, call into question a little bit the effectiveness of some of these tariffs. If you're going to approach it in such a snip-snap, on-off manner.
Yeah. So, I mean, look, my concern earlier this year was that, look, the announcement of these tariffs, if implemented and not given some clear direction as to the end goals, could significantly hurt the economy. It doesn't appear that that's happening. Right? I mean, could the economy, could unemployment be lower, inflation be lower as well, if we were, and growth be higher if we weren't going back and forth on these tariffs? Maybe, but we'll never know.
Right.
What clearly hasn't happened is massive job loss. You haven't seen a massive pullback in investment. You haven't seen a longer-term pullback in U.S. equities. So there's a number of things you can point to that say that hasn't happened in spite of all of the uncertainty around policy. My real concern at this stage continues to be that, hey, if you continue to go back and forth on this stuff for long enough, then businesses, especially smaller ones who don't have a direct line to the White House, right? If you're Tim Cook, you probably knew this was coming and you have a plan to deal with it.
Sure.
If you are, some tiny reseller of electronic equipment, you are not having that same connection to the White House. You don't have the ability to plan that much. And so those smaller businesses, I worry about their ability to withstand this volatility in policy long term. But more concerning than that, I have real concerns about the White House's credibility when it comes to trade policy right now.
Mm-hmm.
And I don't know how that manifests, but I certainly think that if you're a country that's opposing the United States when it comes to trade, you're going to push the envelope because you've seen the changes that have played out every time the envelope does get pushed. See the China negotiations. And if you are an investor, I think you might just say, I'm going to ignore all this because it doesn't seem like a legitimate risk to the markets at this stage.
That's what's been so puzzling, is that I was pretty convinced that we were going to see some poor economic reports come out on the heels of all of this tariff chatter, and we just haven't yet. That's not to say that couldn't happen sometime in the future here.
The theme for the U.S. economy for the last 3 years has been its resilience.
Mm-hmm.
It's been
consumer.
Everything can go wrong. Mm-hmm. You can have the worst inflation you've seen in 50 years. You can have confidence in businesses and individuals really plummeting. But the things that matter in the big economy, the global and the U.S. focused economy in particular, haven't really shaken, and that resiliency is proving itself again in 2025. The question is just how many more shakes to its foundation can withstand.
No, it's worth noting that it's hard to remember this time, but when we had the Federal Reserve increasing interest rates on the heels of inflation levels that we hadn't seen in decades, where we peaked at 9%, oftentimes, and we quoted this statistic frequently on the program, when you have the Fed raising interest rates, that drives a recession. And by all accounts, we dodged that and continue to be in a place where the economy is chugging along okay. And even on the backdrop of all this uncertainty on the business front on tariffs, we still haven't seen any meaningful economic data weakening on the U.S. economy front. So it gives us plenty to talk about. But now it seems like the debt is taking center stage, and obviously that's something that we'll get into with the passing of this upcoming tax bill. But that seems to be much more of the primary focus. Tariffs are still at the forefront, but to me, the U.S. deficit and the amount of debt we have, that seems to be taking over national headlines as the economic focus for the moment.
Let's take a quick break. When we come back, I do want to continue to stay on the EU for a moment here and trade between the United States and the EU. When you think of it as that entire block, it is a massive amount of trade. Where are the deficits in that trade? Where does the United States have surpluses with the EU? And what's likely to be the focus on what is likely to be some rushed trade negotiations now over the next 30-some-odd days. Quick break. We'll be back with that next here on the Financial Exchange.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money, while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
So when we talk about trade between single nations and the United States, Mexico, Canada, and China obviously top the list. In 2023, U.S. trade with Mexico totaled nearly $800 billion, Canada $773 billion, and China $575 billion. So massive individual trade partners there. But when you look at the European Union as a whole, which is who we are negotiating with when it comes to tariffs, we're talking about a number of $1.6 trillion. That's 1.6 trillion euro, which is pretty close to dollars now. And so these negotiations that are occurring, I think they've been minimized a little bit, probably because of the volatility of them and the implementation and then delay of the tariffs. But they are significant based on that total level of trade. And it is very true that the United States has a pretty big deficit with Europe. I think the problem that we're going to face, if the end goal is to level out the trade imbalance, which I keep going back to, I'm not sure that's the end goal. Clearly, that was the highlight of the Liberation Day tariffs, was trade imbalance. But, I think it's become pretty clear that one of the goals is to raise revenue to offset tax changes, and one of the goals has been, bring manufacturing jobs back to the U.S. But assume for a moment that the goal is addressing the trade imbalance. There are a few concerns that if you're on the EU side of this, you're going to have with that. One, when we talk about the trade imbalance, most frequently what gets cited is the imbalance in goods. So they send us olive oil, we send them bourbon. They send us planes, we send them planes, but they send us planes and we send them Fords. And there's a big imbalance there when it comes to that trade in goods. However, when you get to the trade in services, this starts to shift back in the U.S.'s favor, right? So if you go talk about the largest internet-based companies that operate in Europe, yes, you've got local telecoms, but there isn't a Spanish Facebook that has made huge headway. It's Facebook. It's Instagram. It is LinkedIn. It's Microsoft. It is Google, Netflix, and U.S.-based services companies that provide all sorts of technology services to the European Union. When you include that in there, there's still a small trade imbalance with the European Union. And, if that is the focus, I can see where it gets addressed. But that is going to be a major point of the European Union. And I do wonder how the Trump administration tries to navigate that. Might they say, hey, you need to open up even further to U.S.-based tech companies, because it's also true that Europe has some of the toughest privacy laws on the books in the world right now. So, hey, do we want you to loosen your privacy rules so that Facebook and Google can do better business in European Union? Is it going to be more about agricultural products? Again, it's not as though there's massive trade barriers across the board when it comes to agricultural products. It's mainly what types of products they want imported. They have a big problem, for example, with the United States dumping a lot of our chicken in what do we do to sanitize it? It's I forget exactly. Bath. Yeah, we give it a bath with some chemicals, basically, to kill all of the
little bubble bath
to kill all of the diseases. And the Europeans seem like, yeah, we're not going to eat that. We're not going to buy it. We're not going to allow you to import it into the EU. And so, again, problem there. But how do you address it? Another one is the VAT, so the value-added tax. We do not have a value-added tax in the United States, so I think it's worth discussing what it is. It's basically a tax on every part of the supply chain of a good. So Investopedia actually has a perfect example here. Let's imagine that you're manufacturing candy and there's a 10% VAT. So the manufacturer buys the raw materials for $2 and then you add on a 20-cent VAT. The price of that total product for the raw goods is $2.20 now. 20 cents goes to the government. The manufacturer then sells that candy to a retailer for $5. Then you've got a VAT of 50 cents. So you're layering on that tax. And then finally, the retailer goes and sells that candy for $10 plus a VAT of $1. So you're adding a tax on every part of that supply chain. It makes the sale of goods in those countries compared to the United States, which has no national sales tax. We have a state-by-state system of sales taxes, but none of them do a value-added tax like this. It might be a target of that. The problem there is it's a huge portion of EU revenue. We prefer, for whatever reason, in the United States to look at sales taxes, property taxes, and income taxes. EU has a different system. Will they completely reshape the method by which they tax their citizens and instead say, hey, we're going to tax your income a whole bunch more or your property a whole bunch more? I don't know, but those would be really big changes to push for out of the European Union, which, by the way, has a really slow legislative process to adopt changes.
Hard to get 27 nations on board.
It is. It tends to be. Yeah. I'm not saying that a deal is impossible here. And in fact, I think a deal with the EU is likely because I don't think either country wants to see 50% barriers to trade. However, I think meaningful change and change to the imbalance of trade is very unlikely, mainly because we're different countries that focus on different things. The EU just saves a lot more and does not consume quite as much because of, in part, things like the value-added tax. Let's take a quick break. When we come back, we're going to have Wall Street Watch on a booming day for equities. We'll be right back.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Traders are returning from the holiday weekend and are seeing markets in rally mode in reaction to the U.S. agreeing to delay tariffs of 50% on the European Union to July 9th. Right now, the Dow is up by over 1% or 478 points. S&P 500 up 1.5% or 88 points. And the NASDAQ up by nearly 2% higher or 369 points. Russell 2000 also up nearly 1.5%. 10-year Treasury yield down by 5 basis points and is now at 4.45%. And crude oil down about 0.2%, trading just above $61 a barrel. Some breaking acquisition news this morning after Salesforce agreed to an $8 billion deal for data management software firm Informatica, bolstering its AI capabilities. Informatica shares are up by 5%, while Salesforce is up by 0.2%. Meanwhile, Tesla jumping by 5% after CEO Elon Musk posted over the weekend he will give greater attention to his company's XAI and Tesla, as what Musk said have critical technologies rolling out separately. Tesla saw its European sales slump for 4th straight month. Elsewhere, Temu parent company PDD posted a steep drop in earnings and said it expects growth to slow. Earlier this month, the bargain app said it had stopped sending products to the U.S. from China after the Trump administration ended a tariff exemption for small value shipments. That stock, PDD, is down by 16%. In case you missed it on Friday, Nippon Steel received a conditional green light from President Trump to take control of U.S. Steel. After jumping 21% on Friday, U.S. Steel's stock is advancing another 1%. And Disney had a successful Memorial Day weekend at the box office, where its remake of Lilo and Stitch brought in $183 million in the U.S. and Canada. Disney is up by 2% on that news. I'm Tucker Silva, and that's Wall Street Watch.
We're going to hear growing talks about the deficit, about the big, beautiful bill that's made its way through the House and now sits with the Senate. And I want to bring up a few different pieces of this. There's a pair of articles, one from the Journal, one from Bloomberg, about deficits today. And I think some context is helpful. So First of all, pulling up the old U.S. national debt clock, the total national debt is sitting at $36.9 trillion, which comes to about $108,000 per citizen, $323,000 per U.S. taxpayer. In 2024, when I would describe the economy as booming, we ran a deficit to GDP of 6.4%. That's a pretty significant number outside of wartime, just to give some context for it. In fact, when it comes to deficits, we have been running deficits every single year since 2002. 2001 was the last surplus that the United States ran. I'm not a proponent of surpluses. I'm not necessarily saying we should get back there. But when we talk about the last several years, which, let's take a look at post-COVID here for a moment. So 2019, we were running a deficit to GDP of 4.6%. 2020, I'm going to say akin to wartime, we ran one of 15%. 2021, 12%, 2022, 5.4%, and 2023, 6.3%. 2024, like I mentioned, estimated to be 6.4%. Right. We don't have official data yet. The new tax bill, if passed as is expected to extend deficits by $4.6 trillion over the next decade. There will be some offsets here and there. The big question, however, is where do tariffs land? So nobody really knows the answer to that question, but the estimates, were they to stay in place as of a few weeks ago, would be to bring in some $2 to $3 trillion in income from trade tariffs, which, again, these policies are
for the decade.
Yeah,
right.
Which leaves, a $1.5 to $2.5 trillion deficit. The all-important question, which I think Bloomberg puts it quite well. We're about to discover whether or not deficits actually matter.
Right.
Famously, VP Dick Cheney in 2002 said that deficits don't matter, and at that point in time, he was right.
Yeah.
They didn't.
Yep.
We ran them for the next 25 years. Nothing happened. They didn't matter. He was absolutely correct about that. I think he correctly took a lot of flack for it, but he was absolutely right that, you could run deficits back in 2002 and they did not really matter in spite of all of the concerns that people had. The question is, do they this time? And here's the compelling evidence of why they could matter this time. Deficits that we have run in the United States have been largely funded by a growing group of foreign buyers of our debt.
Mm-hmm.
The Japanese, the Chinese, the Germans, all across the globe. I'm calling out a few of them in particular, but all across the globe, foreigners have bought the United States debt at a pretty low rate for a few reasons. One, they had a bunch of dollars because we were sending them their way. They looked at the global universe for government debt and said, hey, the United States is still growing when everyone else is shrinking. That looks pretty attractive. They're beating the demographic shift. Seems like a good place to invest. And there's so much of it that we can trade in and out of it pretty quickly if we need liquidity.
Tremendous amount of liquidity, yeah.
So they've been piling in. The question is, does that change this time? Because if it doesn't change now, then I think Cheney might be right for the long term, that it just doesn't matter. But when you are changing the viewpoint on trade, when you are putting it right in other countries' faces, hey, we hold all the cards and we can shift the narrative around trade whenever we want, one would think that would start to matter.
To me, it's not a question of whether or not it matters. It's when does it matter, and that's the hardest question to answer, because there isn't really one deadline necessarily that it becomes problematic. It really just becomes problematic when there's a shift in sentiment, when, like you mentioned, those foreign buyers start to question whether or not we're good to pay things back. And you also mentioned we've had a period of very low interest rates, and the risk that looms is, like anyone who is highly levered with debt, it's sustainable at certain rates, but you can have a very quick rapid rising of interest rates that's due out on your debt, and obviously not all of that would be subject to it at once, but you're already seeing that the amount of interest that the U.S. is paying on their debt currently as a line item on their budget is increased to, I believe in the month of April, was the highest monthly cost out there. outlay was specific to debt. We now have a GDP. When Vice President Cheney said that back in 2002, debt to GDP was about a 57% ratio. It's now 120%. So it gets to a point with leverage of any kind, even if you're a country different than a household where you can print money, it becomes problematic at some point. The question is just when.
Yeah, and that's the all important question that absolutely no one can answer. You're right about that, Paul. The mechanics of all this, just to be really clear, right? I mean, the U.S. is increasing both the amount of interest it has to pay as well as the net deficit every year that we are facing here. And there's a few different ways that gets resolved. Let's say that there start being fewer buyers of that debt. What happens is rates start to move up. Supply and demand. If there's not enough buyers, then the price comes down.
Incentivize them with higher rates.
You incentivize them with higher rates. If the Federal Reserve says, can't let that happen, we can't let rates start floating away, they can go buy that debt. The way they do that is they print dollars. So, again, what happens there, hypothetically, you print more dollars, the dollar devalues, you end up paying back the Chinese, the Europeans, the Japanese with devalued dollars. What are they going to do next? They're going to say, wow, I'm really worried that if I go lend the United States a bunch of money, I'm going to get paid back in dollars that are worth a lot less. I'm not going to buy that debt. And it once again drives those rates up, and it becomes this spiral. What we've seen from other countries that are nothing like the United States, Greece, Argentina, Turkey, is it happens not at all and then all at once.
Mm-hmm.
I'm not saying that's the path we're going to follow because we don't have a lot in common with Argentina.
Right.
Nor Greece, nor Turkey. Very different economies. But this is what people talk about when they talk about the concerns of deficits. The problem that I have is we've been talking about it the same way for the last 50 some odd years, 20 plus years especially, and nothing bad has happened.
But even more of a problem that I have, and this is respect to either political party, is that the amount of attention that's paid to it is so minimal. Basically, since...
No, that's not true. It is directly correlated to whether or not you hold power. The amount of attention you pay to deficits is inversely correlated to your political power.
Yeah, if you're not in office, if your party's not in office, it's very easy to beat them up. But when you are in office, it is a difference. Completely ignore it. And this tax bill, for all that people may hear about this idea of trying to cut things, there are no cuts here. This is just adding more to it. And the frustration that I have, and it's just venting at this point because nothing is going to happen about it, because the problem with having shorter terms is that these politicians just don't care. They want to come back to their respective towns or states or wherever and just report
got you a
victories.
$40,000 cap on SALT.
Exactly.
Congratulations.
Yep.
Let's take a quick break. When we come back here, I want to talk a bit about earnings season. Like we said, it was a very solid earnings season that was dominated by news about other things. Quick break. We'll cover that next on the Financial Exchange.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
So other than NVIDIA, we've pretty much wrapped up earnings season at this point, Paul, and the results better than expected. Again, we have NVIDIA to go tomorrow, so we will see what they report, but my guess, especially when you talk about their outlook, given the deals with the Saudis and many Middle Eastern countries when it comes to semiconductors, I think their outlook's probably going to be pretty darn good. But what did we actually see in terms of profit growth across S&P 500 companies in this quarter?
It seems like as we wrap up earnings here, the S&P 500 profits are expected to be up 13% in Q1 versus the prior year comps. The big caveat with this earnings report here, or this earnings season rather, was that this is all prior to the April tariffs that were put into place. So largely have been rather sloughed off by people like ourselves and other economists and investors out there, just because they were so backward looking in nature. Really the crux of the
there was some front running too that probably took place that boosted those first quarter profits, would be my guess, but the expectations were for 7% earnings growth. We got 13.
That it was a nice beat there. Certainly it was really though more of a focus on what is the commentary going to be from the executives at these companies, at a Walmart, at Target, and others out there as to what they're going to do facing implementing these tariffs in future quarters. You had a lot of companies out there pulling their guidance for the remainder of the year due to the uncertainty around them. Certainly, you can take some solace in the numbers that we saw and that beat that you had mentioned there on the profitability side of things. But really, it does seem like there is just very little to take away from this, from the big economic picture.
So tariffs were mentioned on 2,136 earnings calls. Some, including Ford, withdrew their financial outlooks. And so I go back to the same story here, Paul. The American economy and American businesses have proven incredibly resilient. They are growing their profits at 13% year over year. That's fairly unheard of in a major developed economy for that to continue at any sort of pace. What has held things back, what has held the U.S. equity market back, which is probably down now like 1% for the year, somewhere in that general range, it has not been fundamentals core to the economy. It's not been concerns about inflation or GDP growth or unemployment or even corporate earnings. It's been about tariffs and what do they mean for the average company and how will companies react to them should they stay in place for any meaningful length of time. So that will probably just continue to dominate because the earnings, they're good.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently 2 of their beaches, Trunk Bay in St. John and Magens Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
I go about mentioning that earnings have been great, and then we immediately have to talk about a company whose earnings have been abysmal. But let's talk Tesla, Paul, because every metric we get every single month on this company, other than the CEO's commitment to staying there for another 5 years and finally stepping a bit away from his work with Doge, has been pretty bad news, and investors were taking it as such. First off, Tesla's European sales nearly halved in the month of April compared to the previous year. That is not because Europeans are driving fewer electric vehicles, like is the case in the United States. Sales of gas and diesel models declined. However, deliveries of fully electric models rose some 28%. Why is Tesla struggling? 1, his politics don't seem to be terribly popular over in Europe. 2, Chinese rival BYD is eating their lunch.
Yeah. Not only are they, for the month of April, did BYD sell more cars in Europe for the first time. They saw a 359% increase according to Jado Dynamics, but also they were up against a more unfair playing field in that there was a 17% tariff in place on BYD imports from China, 35% on other Chinese vehicles that were electric vehicles that were imported, versus Tesla, that its cars that were made in China were only facing in or around an 8% tariff. So
you're facing higher tariffs from the Chinese BYD is facing higher tariffs than Tesla.
Yeah.
Tesla does some of the manufacturing in the European Union. Those ones don't face any tariffs.
Right.
And you are getting destroyed. BYD outsold you for the first time ever in the month of April. This is, I don't know. I continue to just shake my head at Tesla, and now more than ever, no, maybe not quite. Now more than any time since their engineering and delivery issues of like late 2010s when Elon Musk was apparently sleeping on the manufacturing floor in order to get these deliveries out the door. Now more than any time since then has this company faced a real reckoning, and the company is incredibly reliant at this stage on the future promises of self-driving, robotics, AI, other things that are not direct to their business, because the direct to their business piece is struggling dramatically. And not just because of Elon issues, right? Like, there are just EV demand issues across the globe right now, especially in the US, that Ford, GM, and everybody else is facing too. But when EV is all you make, it's a tough, tough putt. Quick break, a lot more to cover in the second hour of the Financial Exchange, including, watch out, a silver tsunami. We'll cover that next here on the Financial Exchange.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. Hope everyone had a lovely Memorial Day, long weekend, and was somewhere where the weather was not as terrible as it was here in New England. We are taking a look here at a market that is surging on news that the Trump administration is suspending tariff escalations on the European Union, which were due to go into effect in 4 days on June 1st at a rate of 50%. Those have apparently been delayed until July 1st to allow for negotiations to occur. Markets moving up strongly, as I mentioned, on the heels of that news, with the S&P 500 surging over 1.5%, the Dow up 492 points, a little bit more than 1%. And the NASDAQ up nearly 2% on the news. In terms of interest rates, you have yields actually moving down to 4.46% on the news. Oil prices also moving down about 1.7%. We've been talking a lot about interest rates recently, so a check-in on mortgage rates where they are sitting above 7% on the average 30-year fixed-rate mortgage, according to Mortgage News Daily, probably why nobody is applying for a mortgage right now. And at the pump, we're seeing not a whole lot of movement. The national average for a gallon of gas is sitting at $3.17. Here in Massachusetts, we're at about $3 even. Up in New Hampshire, you're at about $2.90. Maine sitting at $3.06. Vermont at $3.09. Rhode Island, if I can hover over you, is about the same as Massachusetts. And Connecticut sitting at $3.12 per gallon. Paul, anything else catching your eye on in markets today?
Surprised that Tesla's up from what we covered in the first hour by 5%, but that's the way it shakes out.
It is Tesla. Neil Kashkari, among many other Federal Reserve Board members, has been speaking today, and I think reiterated what we already know. Hey, if you've got markets surging on data about the trade war, if you've got equities basically flat for the year, you've got consumer confidence, which we'll cover in just a minute, surging on trade de-escalation news, then the Fed is going to be in no rush to cut interest rates. And that has been the theme from Jay Powell. It's Kashkari saying the same thing here. But the next Fed meeting is June 18th, and there is currently a 98% chance, according to the Chicago Mercantile Exchange, that they do not move on interest rates at that meeting in a few weeks. In fact, it is not until, let's see, you have to go out to the meeting in September before people gambling on this question see it even crossing the 50% likelihood threshold that rates are lower. And so you're getting out to the fall before anyone is even questioning the likely path for interest rates at this stage. They're not going higher in any meaningful way in the short term, but certainly not going lower either. And so again, good news if you are saving in a CD or in a money market. That rate does not appear to be moving lower anytime soon, but likely still to see no real relief when it comes to credit card rates, home equity line rates, mortgage rates. In fact, we've seen mortgage rates go the complete opposite direction of short-term rates over the course of the last year or so.
Yeah, it's something where really wait and see defines sort of this whole movement with the Federal Reserve at the moment. You have to kind of continue to follow how these negotiations fare over time. There isn't a screaming reason, in my opinion, that you should cut rates. We've been looking for signs of economic weakness. We covered in the first hour of the show. We haven't really seen anything that's noteworthy from a data standpoint so far. Really, most of the negative sentiment has come from consumer confidence readings and things like that, and that probably segues well to kind of our next topic. Was we actually did get a recent Consumer Confidence Board report that came out this morning that did indicate a pretty significant jump in the month of May for consumer confidence in the United States here.
So when it comes to these surveys, there's two main ones that we cite. We have the University of Michigan's Consumer Sentiment Index that they do a reading on and have been since the 1940s. This Consumer Confidence Index, I think, has been around since the 80s. But speak more directly to what we saw in that, because it was a dramatic rise.
So we just saw that the Consumer Confidence Board Index leaped to 98, which was a 12.3 increase from the month of April, and much better than estimates, which had indicated they were anticipating that number would come in at 86. A lot of the reason for the positive sentiment, of course, is the developments regarding the U.S.-China trade impasse, as well as the pause in some of those reciprocal tariffs. It was really visible in and around May 12th. That's kind of when the U.S.-China trade deal gains some momentum, and after that, that's when you saw a uptick in some of the confidence come from those items that we spoke about there. This is following 5 straight months of declines. I mentioned that before, where while we hadn't seen any hard economic data that had been negative, we had seen those consumer sentiment reports being quite dismal, really, in terms of what we saw the prior 5 months here.
Yeah, the consumer has been honestly, very clearly understanding the effect of tariffs on the economy. I think many willing to accept those effects for the potential trade-offs, but no real lack of clarity around what these tariffs could mean for the price of goods and the state of trade. And I think that's reflected in things like this that, again, don't really tell you about what consumers are going to do, but rather how they are feeling. And the big jump that we saw, I think, is significant, and I think we will continue to see them in one direction or another, given where trade goes. But it's also at a level here. So, that most recent read, which came in at 98. For some context on this, we did spend most of the post-COVID era above 100. If you go take a look at the chart on this, we surged to the 120s in 2021 before inflation set in, but most of 2022 and then all of 23 and 24, we were above 100. We're sitting just below 100 now after dipping into the low 80s in April. Compared to post-financial crisis time period, people are still pretty bullish about things at the moment. And I want to make that clear. According to this survey, right, even those lows that we saw back in April of this year, they were substantially higher than we were from any time between 2008 and 2016, basically. And so I think that informs you a little bit of where people are right now, which is there's a lot going for them. They are generally employed. They generally have more money than they did and more wealth than they did 5 years ago. They don't seem abundantly concerned about inflation, although that is showing up in pieces here and there. And they're generally pretty optimistic about where things go at the moment, even when those readings do dip a little bit. The question that I have would be, are they, I guess, too reactionary to those moves in trade given how volatile they've been? And does it actually mean anything? When we've seen these massive dips historically, they have been coinciding with recession. This time around, it hasn't been happening for the last 5 years or so. And so I hesitate to read too much into a drop or an increase in these readings because recently they haven't meant anything for the real economy.
Right.
Let's take a quick break. When we come back, we're going to do a little bit of trivia here for you next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visit usvi.com.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Now's a great time to register for the DAV 5K taking place on Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly, so don't delay. Visit dav5k.boston, reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston. Time for trivia here on the Financial Exchange. And on this day back in 2022, Top Gun Maverick hit theaters worldwide. The long-awaited sequel was the second highest-grossing movie of 2022, bringing in just under $1.5 billion. The number one movie, also a sequel in 2022, grossed nearly $2.4 billion that year. So, trivia question today. What was the highest grossing movie of 2022? Once again, what was the highest grossing movie of 2022? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, I feel frequently that there are pieces written about the baby boomer generation moving its way through society and the age brackets and the pending doom that it's going to represent, whether it's going to be from a shortage of workers or a massive need for long-term care or any number of different negativities associated with this generation moving its way because of just their size through the economy. This is the first one that I've read that's been like, no, this is actually a stabilizing factor right now. And it lays out an argument of, stuff that we probably see every day, which is this generation is spending a whole crap ton of money, and they have a lot of money to spend, and it seems to be helping out the economy in a number of different, perhaps unforeseen ways. But let's cover a few of these basics here. There were a record 11,200 Americans turning 65 every day in 2024. A decade ago, that was 10,000. So this is a marked increase in the number of people turning 65. What does that mean? You're eligible for Medicare. Mm-hmm. What else does it mean? You're getting pretty close to to pulling Social Security. Right. And while the Social Security bucket is definitely something that this generation earned, it is a new series of incomes coming into the households. And so I can tell you firsthand, while it shouldn't, people think about their Social Security checks differently than they do when they spend their own savings. I would tell you as a financial person that you shouldn't think about it that way, but people definitely do. They get more comfortable spending. They certainly get more comfortable retiring once they are eligible for that Medicare. And we are seeing the benefits, I think, of all of that on the big pieces of our economy right now, with some, admittedly sizable drawbacks too.
Yeah, it's interesting. Some of these statistics quoted in here, Mike. You mentioned the amount of Americans turning 65 every day, but you also have had just a tremendous amount of new Social Security recipients. Back in 2015, 1.2 million were added of new people turning on their Social Security. Over the last 12 months, we've seen that increase to 1.8 million. Huge. And then if you just look at the other piece that's examined here is those who are collecting Social Security versus the amount of job growth that we're seeing as a country. And the argument that's being made in this piece is back in, let's say, 2004 to 2006, the U.S. added 6.6 million jobs during that span of time from 04 to 06. There was 1.3 million new Social Security beneficiaries, a ratio of about 5 to 1. If you look at that today, it's basically 1 to 1. Over the past year, we've added about 2 million jobs, and there's 1.8 million new Social Security beneficiaries. So as a result of that, in the piece here in Bloomberg, theorizing that perhaps because we've seen more people retiring and stepping away from their job, it is holding up this labor market a little bit more as you have a phasing out of older employees, more focus on employers retaining that younger generation, and you've seen perhaps less in the way of layoffs as a result of that.
Yeah, that is a interesting theory, right? I think there's been all this anticipation of, AI is going to just wipe out a portion of the workforce. The answer might be you don't need to if you've got this many baby boomers retiring proactively and voluntarily.
Yeah, it's a spot where we're so conditioned to seeing it every single day because we work with a lot of people who are retirees. So I read this and I say, of course.
No surprise.
But we face it, head on every single day because we're dealing with folks in that age bracket. But it does seem like this doesn't negate the negative impact that I think it has on, we talked about new college grads really having a difficult time sort of finding new jobs to be added in the labor force. It seems like that has
the
been
labor
the case.
force is at the best of times difficult to summarize and describe as either good or bad. And, my temptation is to call this a good job market right now. But you're right. If you are a 21-year-old graduating college, it doesn't feel that way.
Right.
The youth unemployment right now is quite high. You are not seeing a lot of turnover in those jobs. It's just that if you've had the job for a while, you're not likely to be losing it right now. The other piece that you're seeing some of this negativity on this, one, you mentioned Social Security. So, part of that big surge that we saw over the last 12 months, by the way, was due to the Social Security Fairness Act, where a whole bunch of retirees that weren't previously eligible for Social Security overnight became eligible. So that adds to it. But it doesn't matter because it's still new money in the system that didn't exist prior to. So one downside, that money's going to run out soon, we're going to have to deal with it. Some politician
couldn't help
somewhere
but think of that,
is going to have to be brave enough to stand up and say, yes, this program is going to go bankrupt and we're going to need to someday do something about it. So far, no real appetite to do that. So we'll just keep kicking that old can down the road. The other one that I think many would point to as a downside to all of this is that happens anytime there's wealth inequality that has built up. And the wealth inequality, I'm not describing this as like diversity or race or anything like that. It's just older people have more wealth. Mm-hmm. They've paid off their mortgages. They owned homes at a rate higher than most anybody else. And so the amount of wealth that has been built up in that older generation is massive. And so that has led to the average age of a home buyer being a record 56 years old.
That was stunning also.
That's unheard of. Toll Brothers mentioned that the portion of homes that they are selling, 24% of their customers are just paying cash.
Right.
Tough to compete, obviously, if you are that, now never mind the 21-year-old, let's call it the 28-year-old trying to buy their first home. Well, yeah, the homes are more and more being designed for the baby boomers, and that many of them are coming in with cash to buy those homes. And so there are some downsides to this, but honestly, the biggest downsides that I see aren't going to play out for a few years. Yes, there is going to be a surge in demand for healthcare. I don't really know how we are going to satisfy that with our current systems, but that's what innovation's all about, and I suspect that we will find systems to fix it. The other one is the stress on our Medicare and Social Security systems, which were poorly funded before the baby boomers. And this has exacerbated the issue substantially, and no politician out there even wants to talk about it.
No. And the housing market, I can't really see any positive catalysts to come on that side either. Nationally, I know
it seems like the type of thing that it just needs to reach a breaking point before people do something.
Right.
Like,
it has to be so profitable to make homes that maybe that would set out for more increased inventory. It's hard.
I don't know. In my community where I live, we voted down any sort of denser housing building that's to be built because, I think logically because people are self-interested. They don't want more traffic. They don't want more dense housing. They want the same feel of the low traffic, quiet suburban town. And sorry, but that does not lead to cheaper housing. In fact, it leads to much more expensive housing. Hence why I could not afford to buy my home today.
Right.
Just couldn't afford to do it with the mortgage rates and the prices that they have gone to these days. And I didn't buy it 2 decades ago, by the way. Just like 5 years ago.
Yeah.
Pretty recently. Definitely can't afford it now. Let's take a quick break. When we come back, going to give you the trivia winner here and then want to talk a little bit about investing in 2025. A couple of stories here that I think are worth talking about. That's next here on the Financial Exchange.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, We're voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, what was the highest grossing movie of 2022? It wasn't Top Gun Maverick. It was Avatar: Way of the Water. Edward from Billerica, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Edward. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Wall Street Journal piece today. Yes, you have too much money in that one hot stock. Now, I think the questions that they got here are pretty extreme. The author claims that they've had readers, friends, and family ask questions like, quote, is it a bad idea to have 85% of my portfolio in NVIDIA? Should I own some other stocks besides Apple? If Bitcoin is 90% of my assets, should I scale back? I'm not going to answer any of those questions because, one, I can't. Two, I don't know who is asking these questions. But the answer to all of them seems pretty obvious to me. Regardless, I think it is happening more and more these days because of the concentrated surge that you have seen in the stock market. And quite honestly, some kind of conflicting advice because for the wealthiest of Americans, they never sell. Right? When you talk about like the uber wealthy, what they do is a strategy called buy, borrow, and die. You buy the asset, you never sell it because if you are, imagine that you are earning $15 million a year and living in Massachusetts. If you go and sell that asset for a capital gain, you're going to face, let's see, a federal capital gain rate of nearly 24% plus another 9% to the Commonwealth of Massachusetts. No, you're just going to die with that thing and you're going to let somebody else deal with it because your kids are going to save a whole bunch of taxes if you just die owning it. The problem is, one, I don't think people understand how that works because at the same time, that person that is making $15 million a year has methods of diversifying. Mm-hmm. One, they probably own a bunch of other stuff. Two, they might be using some complex option strategies in order to diversify out of their real estate holding or their individual stock holding in some meaningful way. I don't feel as though there is some perfect ground rule for how diversified somebody needs to be. But frequently what I see when people are investing is they do not understand just how concentrated they are.
Right.
And that's where I think the danger comes, right? Is, oh yeah, I'm uber concentrated in this one position. And then you go take a look at their less obvious stuff, right? Oh, let's take a look at your 401k and, oh, I have this one tech holding and my 401k is dominated by S&P and technology funds. And, oh yeah, it turns out what I thought was like a 8% concentrated exposure to this one company. Turns out it's like 20.
Mm-hmm. Right.
How to deal with this is the tricky part. Where to set the thresholds is tricky in and of itself, but how you manage exiting a position, how you manage raising cash for your retirement for when you need to spend this money. If you're considering gifting in your, later years, perhaps to your kids or grandkids, what do you choose to gift? Do I gift cash? Do I gift money into a Roth IRA, a 529? Do I gift stock that's appreciated a whole bunch that I want to give to the next generation? These are complicated questions that honestly only kind of relate to investing, right? A lot of these are tax-related questions. A lot of these are estate planning-related questions. But I can tell you firsthand that I see them all the time. And I think that because of the massive run-up that you have seen in some of these high-flying tech names over the last few years, really since like 2010, with very little downside to it, there's been some complacency built in on the part of individual investors. If you have landed yourself in this position, congratulations. It means you've probably made a boatload of money. Protecting that sum of money and ensuring that it's still there to work for you a decade from now and 3 decades from now is an incredibly challenging thing to do. And I can tell you again firsthand the number of people that I have seen lose 80% of their wealth from not making those diversifying decisions. If you're facing this type of difficult set of choices and unsure about how to proceed with them, give the folks at Armstrong Advisory Group a call and let us walk you through our method. The number is 800-393-4001. We have financial advisors and offices located throughout the New England area and would be happy to meet with you over the phone, via Zoom, or in person, whatever works best for you and your schedule. The number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
All right, Paul, we've been talking a lot about the student loan crisis and the kind of pending doom of it because starting this month, the Trump administration already began putting millions of student loan borrowers into collections. Starting next month, those collections, I believe, are actually going to begin where those in default can have their wages, tax refunds, federal benefits get collected by the United States government. Morgan Stanley is estimating that the payments this year of 2 student loans will be a collective $1 to $3 billion per month that need to be made, some of which obviously won't because the loans are in default. But the question is, how does that start to weigh on the economy as a whole? And that's obviously a difficult one to answer.
Yeah, they've estimated that it could trim GDP by 0.1%. That's the same economists at Morgan Stanley that did that particular estimate. It seems like those delinquencies that we're going to see here this month, the Federal Reserve Bank of New York reported the student loan delinquency rate was up from 0.7% in Q4 to 8% in Q1, back right around where it was before the pandemic.
And that's important because I feel like we keep talking about the student loans in terms of the giant problem that it is, and it, I think, is. But the delinquency rate in the first quarter got back to where it was pre-pandemic. It didn't go to twice where it was.
Sure.
It just got back to where it was pre-pandemic. I think the problem is that there were no payments made by a whole bunch of people during the pandemic, and so those delinquencies might be on much higher balances now.
I imagine so. I've mentioned this on the story before, and this doesn't relate to the economic impact of it, but it's just very challenging to have a lot of sympathy for those borrowers just because of how it was such a long period of time of forbearance that I don't have the sympathy. There is going to be a day of reckoning at some point when you have debt out there. It can't just be fully wiped away, and you should take advantage of what was a period of time to pay some of that off. But that's
I'm
a
with
separate
you.
tirade I like to make when this comes up. It just frustrates me why there should be much empathy on this issue. Plenty of other issues out there economically that I can have empathy for and difficult situations for people, but this one is just not one of those.
Yeah, look, I think the way we deal with university and college is a mistake in this country. I think we do a crap job of, explaining to 17-year-olds what it means to borrow $100,000. There should be a lot more education on how that works and what it means and whether or not you'll ever be able to pay it back. So, I have some empathy from that standpoint, but you're right. Every interview I see done is like, oh yeah, I was getting these notices, but I just ignored them because I didn't recognize what it was. And so then I got a collections notice and my wages are being garnished. It's like, you just threw out mail to you from the federal government for a year and a half?
You know how many notices you must have gotten during that span? It's not like they just do it once. You get a lot of notices.
You do.
You really have to have your head in the sand.
Now, the debt collectors have changed. Some of them went bankrupt during COVID and new ones emerged. And so the name of the entity that is trying to collect from you could be different. But again, yeah, you really have to intentionally ignore this stuff. And in the case of the person that I remember this reading about, I'm like, okay, and then you posted about this on social media. It's like, I would never hire you. I would never hire somebody who intentionally ignored a bunch of stuff that came to them. Like, why would I have any confidence that you're going to respond to my emails in a timely fashion? The other really scary and disheartening piece of this, there are approximately 3.5 million Americans who are over the age of 60 that have student loan debt.
Wow.
Totals $125 billion in student loan debt held by Americans over the age of 60. I don't remember the stat on specifically how many of those are in default, but it's not an insignificant portion. I believe it's more than 10% of that 3.5 million who are not paying on them and are in default and are going to see their Social Security checks starting to get garnished pretty soon for those payments. So that is the piece that continues to shock me, is those baby boomers who still are holding on to that debt and have been unable to repay it. Let's take a quick break. When we come back, Stack Roulette here on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
Paul, time for a bit of stack roulette. I want to start off with artificial intelligence at the doctor's office. And I have a funny story about this, and then I want to actually talk about the seriousness of it and where it's working, where I don't think it's working. I have a friend of mine who gets pretty queasy with medical stuff. I've seen her get lightheaded.
That's me.
That's you, when seeing blood.
Oh, yeah. Can't watch The Pit on HBO.
They had a doctor's appointment recently where the doctor was looking at something, and he was using AI, or he or she was using AI to note take for them and make sure that it worked well. And so what my friend found was that they were describing everything that they saw in a lot of detail because they wanted the note-taking to accurately capture what they were seeing. She passed out. Full-on fainted in the middle of the doctor's appointment because of what he was describing out loud to the AI system. I'm guessing that that's a pretty rare side effect, but you can imagine, right? Like stuff that usually just silently goes in your notes, you're saying out loud and describing in a whole bunch of gory detail. Wasn't for this person. I don't think they'll be allowing the AI in their offices anymore. This patient, rather. But the reality is that it does appear to be saving a lot of time. And by the way, this exists in the investment industry too. It's one of the fastest growing areas where if you're meeting with your financial advisor, they will have an AI assistant on their phone open and listening to your conversation and taking notes. I think it has vast applications in any industry where details are important. Legal meetings, doctor's offices, financial advisory meetings. I see a lot of downside to it too, but in the pilot that MGH did where they had 2,500 physicians using the technology, they found that the daily documentation time outside of clinic hours, which was running 90 minutes, cut down to under 30 minutes. Wow. That is a huge cost savings. The other future that they predict with all of this is an AI system that would go through your medical records because, imagine, Paul, I've got my annual physical. The doctor probably has a bunch of notes from maybe the doctor might have some notes in there from my visit to a emergency care place or to somewhere else. The AI system can summarize it all up for you and put it together in terms of some concise stuff to read through and give the doctor some information on. My problem is privacy and comfortability. I just do wonder, right? Like if I'm going to my doctor's office and they, in Massachusetts, they have to tell you that they are recording you, and several other states as well, and get your buy-in. They're going to put a device on the table, let's say, and say, hey, this is going to record our conversation. I use it for note-taking. Am I going to be as forthcoming and transparent and honest with that doctor as I would be just one-on-one with somebody that I know personally? I'm a little bit less worried about it in the medical space than I am others, but I don't know. I don't want every word I say being recorded.
Yeah, you would hope that with that medical industry, protecting patient confidentiality is the most. But they've been joking,
right? They've been hacked more than any other industry.
Yeah, they've been hacked like crazy. So, but kind of to make that argument, like, yeah, your data's probably been hacked anyway, right? Like it's your medical records are probably already out there.
Yeah.
So it certainly is a tough one. Certainly the idea of being recorded, I don't know if anyone feels always fully comfortable with that because you just can't have the same level of candor in
it's
those
probably a generational thing.
Yeah.
My guess would be I'm uncomfortable with it today and my kids will be fine with it.
I agree. Because they're just going to grow up with it.
They're just going to grow up with it. It's going to be normal, and their generation will see these big cost savings from AI that doctors and other professionals are able to
The same thing
drive.
with us in electronic payments. If you think about it, over the computer and over your phone, that is an area where I would argue you and I are much more comfortable than our parents are doing it. Now, they've acclimated, and the pandemic really pushed that forward a little bit, but much more comfort doing business or e-commerce on your phone, and that same sort of thing could happen here. I think from a diagnostics perspective, though, it does have potential to be a huge benefit to be able to aggregate symptoms and health history in order to assist, but you never want it to be the end-all, be-all.
Yeah, I mean, I don't know. I think my answer there is the same way that I'm approaching it with investing. Like, until somebody proves out that an AI system is going to be able to accurately take a whole mound of data and predict what the best stock is going to be next year, or until a doctor is able to use AI to collect a bunch of data and predict what the most likely ailment is in a patient, I don't want to jump into any conclusions there. And I think you are seeing more evidence of that in the medical space than you are the investment world, but I don't know. I hesitate to believe that that's going to be the case.
It's a possibility. It certainly is a possibility. For My Stack Roulette, Waymo is making its way through Boston. This is a story that we covered a couple over the last week or so. So Waymo, for those who don't know, is the self-driving taxis. They are coming to town in Boston, but to be very explicit here, this is not that there is going to be self-driving vehicles out there with passengers. This is just they are mapping out the streets of Boston. And of course, Boston and the Globe has had a field day with this, and we had a field day with it on the show here, obviously with our local presence, where this one Reddit user said good bleepin' luck to these potential Waymos mapping out the streets of Boston to see whether or not they'd want to do business here in the future. They mentioned things like the K Circle it's a notorious Dorchester Rotary, is going to bring the software to its knees, and many other just quirks that come with driving in Boston, to put it as nicely as possible. We'll have to see. And this doesn't even include the potential impacts of weather. This is obviously going to be mapped out over the next couple of weeks. Here we sit in the month of May, where you don't have to worry about icy roads and snow as an impediment to those drivers driving around the city.
I have to tell you, I respect it. I don't know if they're actually serious about coming to Boston or not, and I think they're going to struggle to do so. But for this company to say, you know what, we are intentionally going to make a big deal of coming to one of the most notoriously difficult cities in the country to drive in, you have to respect that. Even if they fail miserably, like the Cybertruck, I have to respect the goal of doing something different.
Definitely throwing on your big boy pants when you step into to Boston, because right now it's San Francisco, Phoenix, and Austin that they operate in. A little safer to drive.
Quick break for the next 22 hours. S&P up 1.7%. The NASDAQ up over 2% now as we close out the show. Have a great rest of your day, everybody.